Hey, good morning, everybody. Today is Friday, November 3rd. Let's do a quick morning call. I haven't been doing this for a while, so let's do it. First of all, just to review what I wrote yesterday. As I put in the summary, then we review everything. So I'm looking for 4,319 as the maximum upside target, even if we have gamma at 4,325. Remember that we are in a positive gamma territory. What's the pattern in positive gamma territory? Sell rallies by weakness. Totally different than we are in a negative territory. In a negative territory, usually is when we saw big candles as we saw yesterday, like almost 2% higher, right? Basically short squeeze. So negative territory, what they do, they sell weakness, they buy strength. It's delta hedge. Same thing, in the positive gamma in positive gamma territory, but instead of buy strength, they sell strength by weakness. Delta hedge also. Okay. Anyway, so that's the target for the upside. In my humble opinion, is a red day today. 4,319 is the maximum upside, but we have gamma at 4,300 up to 4,325. And regarding downsides, I'm looking for 4,245 as the maximum downside target. We have, a very heavy agenda today. Very heavy agenda today. Because those data will move, especially DXY and yields. Okay, so moving yields and DXY back up, usually risk assets go down again, right? So we have agenda that could affect basically DXY and 10-year yield. Both up, risk assets down. It's like a risk off mode. Okay. Also, I highlight to you guys in my market wrap and in the closed group that crude oil starts a trend, a uptrend, right? All dips have been absorbed. This is 5 minutes, this is 60 minutes, this is daily graph, monthly graph, weekly graph, and 4 hours graph. Okay, so you guys have been observed that yesterday our bottoms have been absorbed. So I decided to close my short in oil and also start to short TLT. Why? Because shorts is going up. We have resistance now. Over here, will be more easy to see in the 60 minutes. Those are the EMAs that I like to use in other indicators. So, but you have a resistance now at 83. That's the yellow line over here. I tell you exactly 83.36. Now, before was a support, now is the resistance. If we break this, I'm looking for a possibility to jump up to 86 or 85. That match with EMA 50, EMA 20, and the middle line of the bullion band. Okay? If you guys look, for example, for tricks in 4 hours graph, it's already given like a buy sign and MACD as well. Also, in the 1 hour, if you like, you guys look for ADX and DMIs, we already have like a bullish enlace. And as I said, starting yesterday, our borders have been absorbed. Could it be a war? Yes, could it be a war? Because this downtrend, this bullish engulf, my interpretation is pricing a recession. Because we don't have demands for oil anymore to be trading those levels. The correct price to oil nowadays is like 40, 60. No more than that. Of course, below 40 is a big recession. Okay, that's a big recession. But usually for the current worldwide demand that you have, the correct price is between 40 and 60. Okay, so since it started to go a downtrend, my call was yields tend to go up. Let me remove the oil graph from screen. Let me bring yields and dollar. So I also post in my market wrap. Looks like that the 10 years yield left, a reversal candle. Every time that, 10 years yields back test the bottom line of the bullion band nearby the EMA 50 and leave like a dragonfly or a hammer, like 1, 2, 3, and also with a big gap, we see a spike up again, at least to try to backtest the top line of the bullion band, like here, like here, like here, like over here. Over here, of course, didn't went up to there, but went up to backtest the EMA 20. So those are like here. So those candles, in my interpretation, is a reversal candle, and then I start to close the short in oil and open a short in TLT, because crude oil starts to enter in a trend, consequently affect the yields, and consequently the yields curve also, and bonds face price. So I decide to close oil and start to short TLT, okay, using a bearish ETF. That is T as Tom, M as Mom, and V as Victor, TMV. Okay, and then I'm expecting a spike at least to back test the last stop. If you break the last stop that was for 4 almost 4.997, at least to back test this trend line that's around like 5, or even 993 bottom, that 5.19. For me, it's totally reasonable. I don't think we revert yet, the yields. Because if you also look for the weekly graph, this downtrend is already holds at EMA 8, right? We didn't break down EMA 8 to see like a really reversal as everybody's talking about. Especially if, we start to see war, a really war in the Middle East, and the Gulf of Oman will be closed by Iran, usually the spikes of the oil could be spike higher. I'm looking for 86, but could be go higher. Because, I guess more than 50% of the worldwide demand is supposed to be passed for the Gulf of Oman. If they close over there, you'll be fucked up. The oil will spike, the inflation will spike, everything spike, right? So, I hope you guys understand, my call, my thought, my study regarding oil and the 10 years yield. Okay, let me get back to the market wrap. So, regarding today's book, I also put out the notes regarding 10 years yield and the DXY in the book. You guys also observe that the dealers, remove a little bit of the liquidity, and they spike the GX. Usually, when GX and DIX walk in a different path, that's not bullish, it's bearish, according to Squeezy manual. Okay? Higher GX means lower volatility, so it's controlled sell-off. Tends to be a controlled sell-off. But lack of why, my thought is already, because they remove liquidity. Remove liquidity doesn't mean that market you sunk, but remove liquidity means that if you want to enter inside the boat, the door is so tight. So if they want to sell higher, they will melt the market up. But they already increased the GX, so doesn't make any sense, to see a spike, because to move market money is needed. So looks like that, the Squeezy-matic, print, is a bearish print, but is a very controlled sell-off, because higher GX means volatility will be suppressed. Okay, the book is already prepared to go higher or to go lower. My stud, according to what I wrote in my market wrap, I'm looking for a red day, and yes, a possibility to close below 4,255. I could be wrong, of course I could be wrong, but today we have a heavy agenda. Oil is in trend, so in my humble opinion, the 10 years yield bottom, and you could see a spike from now on, and dollar holds at March top at 105.883. That's not a bearish at all. So we could be a zigzag back test again, this support, and then start going up. Okay. And why, in my point of view, we're going down today. First of all, the implied volatility in the put contracts, right, is higher than the call contracts. Higher risk, higher premium. Okay, even if we have a suppressed VIX, right? So we could see, even if you like lower volatility, we could see deltas being burned in the call contracts. So according to the implied volatility, looks like that we have more premiums in the put contracts. That's what my vision. Remember that you have negative deltas at 4,300, 4,280, and 4,250, and positive delta flow at 4,445. What's the pattern of gamma, positive gamma territory? Sell rallies by weakness, by support, sell resistance. So that's look like that 4,445 is the support and where the buyers are seated. As you guys observed yesterday, the put call rate measured through volume is still bearish because above 1. But in another hand, the delta flow is bullish because it's a positive territory. But looking for today, the structure is kind of different. Now the put call rate based in volume is bullish because it's below 1. But look how big was the drop in the delta flow. It's huge, right? It's huge. So also, the delta flow is kind of different comparing as yesterday, because 4,455 print positive delta flow, right? Very high. Now we have negative delta flow. We have positive delta flow now start at 4,230. So now we could be, the maximum downside side could be changed. Instead of 4,245, could be 4,230. And then we could close below 4,255, as I thought since Tuesday. Okay? Of course that I could be wrong, but I'm trying to show you guys the market structure for today. Lower liquidity, higher GEX, gamma exposures, that show us, a resistance 4,225. So if they sold those calls to build like a resistance, I'm looking for 4,319 as a maximum upside target. And now maybe 4,230 is where the buyer is supposed to be seated. Before, I was looking for 4,245. Guys, have a great Friday. Take care. Enjoy your life. Enjoy your family. Enjoy your time off.